All right, why don't we go ahead and get started. Again, welcome everyone, and on behalf of Frontier View, thank you for joining our webinar series. On today's webcast, we will present our outlook for the Southeast Asian countries in 2021. Southeast Asia are expected to experience a steady recovery in economic levels this year, with multiple markets growing beyond pre-COVID levels. However, despite improving growth prospects, companies will need to navigate substantial risks that may affect their top and bottom line growth. Large secondary outbreaks may derail economic recovery, rising political tensions can negatively affect investor sentiment, and high levels of consumer fear may disrupt retail activity. In this webinar, we'll provide insight on the expectations for recovery and economic growth. We'll highlight measures affecting consumer and business sentiment, and we'll feature key macro political risks for MNCs in 2021. My name is Richard Leggett, and I'm the CEO of Frontier View, and I'm excited to be moderating this discussion and delighted to be joined by Ashu Agarwal, Frontier View's Senior Analyst for Southeast Asia. Ashu and I would like this very much to be an interactive discussion, so please be sure to click on the Q&A box on the right-hand side of your screen and send your questions to Frontier View Webinars, and we will work to get as many questions included in the discussion as possible. Also, as a reminder, if you are a client, you can access Ashu's research and all of our market intelligence research and data on your Frontier View desktop and mobile applications simply by logging on. And if you're not a client, for registered attendees of this webinar, we are offering complimentary trial access to Frontier View. To take advantage of this offer, please request a trial in the comment box or simply visit our website at www.frontierview.com and click the Request Trial button. Before we get started, we realize that some of you may be new to Frontier View, so I'd like to take a minute, and I promise it's just a minute, to provide you with a quick overview of our firm and how we support multinational executives. Frontier View is a premier global market intelligence and advisory firm, and our primary focus is on serving the market intelligence needs of global business professionals at multinational corporations by informing and empowering their market monitoring, strategic planning, and international growth priorities. From the very beginning, we built Frontier View to be different in three primary ways. First, our product and service model has been purpose-built to serve a global business audience. In every aspect of our work, we strive to separate signal from noise and answer the so what, now what questions that are unique to international business professionals. Second is our model, which we call Strategic Intelligence as a Service. Frontier View is the only market intelligence solution that bundles together information resources, analyst advisory access, and senior executive network events all under one roof. And finally, we are especially proud of our world-class technology, which powers the Frontier View desktop and mobile application and has been built with the sole purpose of informing our clients' workflows and decision processes. We're incredibly proud of our client base, which today includes a community of over 4,000 and is growing, some of which you see here. And again, if you're not a client and you're interested in receiving trial access to Frontier View program, please visit our website and click the Request Trial button. All right, having briefly introduced the company, I'd like to take a moment to introduce our presenter. As I mentioned, Ashu is Frontier View's Senior Analyst for Southeast Asia. He is responsible for our coverage on the key emerging markets in ASEAN, including Indonesia, Malaysia, Philippines, Thailand, and Vietnam. And because he's in constant contact with our clients, he'll be discussing not only the results of our research, but also what we've been hearing from multinationals who are preparing to navigate a most volatile 2021. Ashu, thank you for joining me today.
Thanks, Rich. It's great being here.
If there are any insights that you see today as part of this discussion or any questions that we don't get to answer during the call today, our client services team, Sarah, Ravine, Althea, and Yu-Chen will be happy to follow up with you directly. And with that, I'd like to turn things over briefly to Ashu to take us through the agenda for the webinar.
Great. Thank you, Rich. So for today's agenda, what we're really going to start off with is a broad regional overview, focusing on the current COVID-19 situation, looking at how some of the case numbers are changing, what are some government responses to that, and also what is the current vaccine rollout plan. We'll also then be diving deeper into some of the economic indicators, looking at how economic and business opportunity is recovering or evolving in 2021 and what we expect to change during the year, also particularly highlighting some political risks and some specific areas of opportunities for multinational companies. We'll then do a deeper dive into two individual segments, one for B2C companies and the second one for our industrial companies, just highlighting specific trends in online and offline retail for B2C, and for B2B focusing on investment, construction, and manufacturing. And of course, we'll end the session with a short Q&A session, allowing you to ask us questions.
Great. Thanks, Ashu. Now, before we dive into the specifics of the discussion on the various ASEAN countries, I always think it's good to put our client's hat on for a second and think about how do we place ASEAN right now in the regional context across APAC?
Absolutely. So when it comes to Southeast Asia in the regional APAC context, what we can see is that Southeast Asia has fared quite well compared to a lot of other countries in the region. In terms of containing the overall COVID-19 situations, there are surely some countries which have experienced extremely large outbreaks and are still experiencing them. There are several others which have been quite effective in containing the virus and have also been fairly effective in maintaining relatively low number of cases. There has also been quite a bit of government support for both for consumers and businesses supporting overall economic performance. And there has been, to a certain extent, a revival of economic activity that we expect that has already taken place at the end of 2020, but also something that we expect to continue on in 2021. And so if we look at the chart that we have in front of us, where we've indexed 2019 at a level of 100 at our pre-COVID level and see how we expect economic activity to recover over time, we can see that Southeast Asia is pretty strongly positioned compared to a lot of other countries in the region, such as India, Australia, and Japan. Of course, China has been performing a lot better and is expected to post really strong growth. But compared to most other major economies in the region, ASEAN is expected to recover fairly quickly and is also expected to emerge stronger than a lot of other countries in the region.
Yeah, and I would also say just as we look at ASEAN relative not only to the other countries in the region, but really on a global basis, it's one of the fastest growing and most attractive markets in terms of recovery and trajectory of recovery. And because of this relatively faster recovery, I think a lot of our clients are looking at ASEAN as an area for growth and opportunity, while some of these other markets, some within the region, but mostly also outside the region around the world struggle. And we'll surely be talking about some of these specific areas where there's opportunity for growth for multinationals. So let's dive in, Ashu. Let's get going into our deep dive into Southeast Asia with an overview, perhaps just of let's kind of take a snapshot of where we are in terms of the COVID-19 situation in the region and kind of some of your key highlights and takeaways right now.
Mm-hmm. So when it comes to the COVID-19 situation in Southeast Asia, the overall landscape has changed very significantly compared to what things looked like just a couple of months back. A couple of months back, Indonesia and the Philippines were really the countries that were experiencing significant outbreaks, whereas Malaysia, Thailand, and Vietnam were countries that had the virus overall very much under control. Of course, somewhere in the beginning of the last quarter, Malaysia started experiencing a second wave of outbreak, cases started to rise, but still things were not really too bad at that point, allowing the government to really continue a lot of economic activity. And overall COVID-related disruptions were not as significant. But if we look at the current environment, things have changed quite significantly. The number of cases in Indonesia continue to rise and have risen quite rapidly in the last couple of weeks. At the same time, when we look at the Philippines, the number of cases has actually started declining. Now, we don't expect the number of cases to really come down close to zero, at least in the case of the Philippines, anytime soon, just because the country does not have the necessary infrastructure and also the facilities to be able to drive overall case numbers to a very low single digits per se. But we still do expect overall COVID-related disruptions to reduce in the Philippines. But at the same time, what we've seen is secondary outbreaks come up in a number of other countries that had been able to contain the virus a lot more effectively the first time around. we could already see that the number of cases in Malaysia had risen quite significantly in the previous chart. But what we can see here very clearly is that the second wave of outbreak that Malaysia is experiencing at this point in time is very substantial and is much bigger than the wave of outbreak that we saw in Q2 of last year. At the same time, what we are also seeing is Thailand experiencing a little bit of an outbreak. Though Thailand is in a much better condition right now. The overall outbreak started a little later, but also given just current data, it seems that the virus is a lot more under control in Thailand. And so COVID-related disruption shouldn't last for too long. Whereas in the case of Malaysia, it will still take a couple of weeks and possibly even months for the number of cases to come down. And that is given or making the assumption that the government sticks to some of its social distancing measures and its lockdown requirements that it has put in place right now. And this is largely the current situation and pretty much what we can expect in the next couple of weeks and the next few months. But what we expect even during the rest of 2021 is that most of these countries will experience secondary outbreaks or will experience the continuation of the first wave of outbreaks. And that will create some temporary disruptions time to time. And as a result, even as the number of cases come down, even as things seem like they're under control, companies need to be ready. They need to be resilient to be able to tackle any second wave of outbreaks or deal with any disruptions that secondary outbreaks might cause to their businesses. Contingency planning as a result becomes increasingly important even in 2021.
Yeah, I mean, we always talk about contingency planning, but boy, if there was ever a use case for contingency and scenario planning, this 2021 year, I think will be the proof point. And it seems like several countries, as you point out, are going to continue to face some disruptions, and they might be rolling disruptions, right? We're going to have periods where it feels like the curve is flattening, and periods where it feels like secondary or maybe even tertiary wave of outbreaks is occurring. And so I guess one of the things that we should be helping our clients understand is what to expect when it comes to government measures and government interactions to help tackle rising cases.
Mm-hmm. Yep, and governments across Southeast Asia are at this point in time increasing their lockdown restrictions, particularly in countries that have seen an increase in the number of cases more recently, such as Indonesia, Malaysia, and also Thailand. And so you can see here, what we have on the chart here is something called the Stringency Index, which basically measures the containment responses by governments across the world, actually, and it quantifies it in a way such that you can see how these efforts or these responses have changed over time, and also to a certain extent how they compare against other countries. One thing which is very clear here is that a lot of countries have increased their lockdown restrictions, and countries specifically such as Malaysia have increased it pretty much to levels that we saw back in Q2 of last year, just because of how significant overall lockdown restrictions there are. And so what we expect going forward, very much in line with what we expect with secondary outbreaks coming up during the rest of the year, is that countries will have to implement some lockdown restrictions time to time, which will restrict some economic activity, some business activity. Now, what really is the impact of these government restrictions on businesses? Now, the first is, of course, the direct impact. When lockdown restrictions are put in place, and if restrictions are put in place, for example, on capacity, the capacity at which factories can operate in, or if retail stores are forced to shut down, or if restaurants are forced to close, that of course has a direct impact on businesses and multinational companies that are operating in those sectors. But apart from that, there's also an indirect impact on overall consumer sentiment and consumer fear levels. Lockdown restrictions, in a way, are direct communications by the government to the citizens on how seriously they should really be taking the current situation. And so what we've seen is that countries that have implemented large, substantial, strict lockdown restrictions have caused a significant rise in consumer fear levels. And this impact is quite significant because it doesn't just last for the period of time that the lockdown restrictions are in place, but actually continues to drive consumer behavior for a slightly longer period of time. And so this is not just the stringency index or overall lockdown restrictions are just not an indication of current economic trends or economic events that are taking place at this point in time, but are also a leading indicator to see what consumer behavior might be like a few quarters down the line.
So, Ashu, just to be clear, because I think this is a really important point, given what we saw, let's say, right as the pandemic was really starting to reach its first peak in this second quarter of last year, I guess maybe a little more in the end of first quarter in Asia, are we expecting kind of, and maybe you can give a little bit of a regional nuance to this, but or even a sub-regional nuance to this, but are we expecting governments to implement similar types of lockdowns, or will there be learnings from the past situation that are applied here? Like, you know, how can companies plan around disruption driven by some of the things you just talked about in lockdowns this time around?
Mm-hmm. Well, while we expect lockdown restrictions to come in time to time because of the secondary outbreaks, what we are seeing is that countries are a lot more reticent to implement strict lockdown restrictions. And almost all of them are prioritizing economic stability over the rising health risk levels at this point. And so, as we saw in Malaysia, given the secondary outbreak, the government, when the number of cases started rising, the government really did not restrict much. It did not implement strict lockdown restrictions. It allowed most economic activity to continue, even though the number of cases were rising quite significantly, and despite also the fact that the Malaysian government was very active in implementing strict lockdown restrictions in the second quarter of last year. And so as a result, what we expect, even when future outbreaks start popping up, is that governments will likely try to avoid implementing strict lockdown restrictions. What they'll more focus on is isolation, testing, contact tracing. But one thing that's important to recognize, of course, is that there are only some countries that are able to do that effectively. Thailand, for example, it can be seen, at least at this point in time during the second wave of outbreak that it's experiencing, has been able to mobilize its local or commune level officers and volunteers to be able to pursue some of these initiatives, such as contact tracing and isolation, to contain the virus without having to implement very strict lockdowns. And so a country like Thailand can be a little bit more effective with that. But Malaysia, on the other hand, hasn't been very effective with that and is experiencing a much larger outbreak. So overall, to sum it up, basically, we do expect countries to take a lot longer to implement lockdown restrictions. But if things do get out of control, if they're not able to contain the virus using contact tracing and testing, they will have to start implementing some of those restrictions, which will disrupt overall economic activity. So it's important to build in that flexibility into your plans so that you can minimize that impact from the lockdown.
Yeah, back to our theme of contingency and scenario planning. And also, I think importantly, segmenting and prioritizing your market segments where there's most likely to see the greatest return and minimal disruption. All right, let's I want to just cover a couple more things related to COVID, and then we can move on. But I think it's critically important to talk about vaccine and vaccine rollout, especially in light of some of the new mutated strains we're starting to see of the virus. So give us kind of a current state of play of vaccine availability, supply, timeline for inoculation across the different countries in the region.
Mm-hmm. So the secondary outbreaks that have come up in several of these countries have surely expedited governments' orders for vaccines. And what we can see here is that a lot of countries, actually most countries in Southeast Asia, have placed orders for at least some vaccine to start covering the entire population. And not just that, most of the countries in Southeast Asia are also looking to diversify their sources of vaccines, trying to sign deals with a range of different vaccine providers to be able to cover its overall population. But there are a few things that are important to note here. One is that the efficacy rates of these various different vaccines still differs quite significantly from manufacturer to manufacturer. And as a result, it makes looking at overall vaccine rollout procedures quite complex. As a result, if companies are looking to, or if countries are looking to obtain vaccines from manufacturers who have relatively low efficacy rates or uncertain efficacy rates, it could be that they inoculate a very significant proportion of the population, even 100% of the population, but would still not be able to reach herd immunity, which is really required for them to significantly start opening up the economies. And the second thing to recognize here, of course, is that countries are nowhere close to even potentially having ordered enough vaccines to hit herd immunity. What we have highlighted in this chart here is confirmed and potential orders. And even when we combine those two categories together, most countries do not have enough vaccines to cover the 60 to 90% inoculation rate that would be required to reach herd immunity. And as a result, it is going to take quite a while for these countries to be able to order these vaccines, receive them, and actually then inoculate the populations. This will further also be, or this challenge will be accentuated also by things such as a complex geography, a weak infrastructure, and also significant population sizes. And as a result, when we look at the 5 Southeast Asian countries, the emerging markets, we don't expect any of them to be able to hit full vaccine access or really herd immunity in 2021. We expect Malaysia, Thailand, and Vietnam, which are markets with relatively less money and weaker infrastructure, but still are in a comparatively better position to be able to reach full inoculation levels, to really be able to achieve that in 2022, whereas more complex geographies such as the Philippines and Indonesia, who also have extremely weak infrastructure, healthcare infrastructure, and also very complex geography, for them to only be able to hit full vaccine access after 2022. And as a result, the impact of this vaccine rollout on 2021 economic and business activity is likely to be quite limited.
Well, let's dive into that then, Ashu. If we look at these factors collectively, the trajectory of COVID, the vaccination timelines, lockdown restrictions, all that kind of factored together, and I know I'm asking you to maybe do the impossible here, but that's what we're paid to do, is what is our current baseline assumption with regards to economic recovery in Southeast Asia, and how does it kind of vary country by country?
Mm-hmm. So overall, we expect most of the countries in Southeast Asia to really experience a gradual economic recovery throughout the year. Of course, Malaysia is expected to experience this temporary disruption in that recovery because of the outbreak that's taking place right now. But once that outbreak is contained, we expect a fast recovery. What we can see when we look back at 2020 is that after lockdown restrictions were eased in the third quarter of last year, you can see that Malaysia recovered rapidly in terms of economic activity. We expect something similar to take place even after this current wave of outbreak is really contained. But otherwise, when we look at most other countries, Vietnam is expected to continue expanding. It already crossed pre-COVID levels back in 2020, and we expect it to continue expanding beyond that as a result of continued inward investment. And also because consumer activity was relatively less affected in Vietnam because the government was very effective in containing the virus. So employment levels, income levels have been relatively less affected, and retail sales as a result is expected to really continue increasing throughout the year. Other countries such as Thailand, for example, are expected to experience a slow recovery, even though investment and domestic consumer activity is expected to recover pretty quickly. And that's largely because of the impact of tourism. The Thai economy depends very heavily on its tourism industry, which has come to a practical standstill at this point in time, with very few number of tourists coming in every single month, at least for the last couple of months. And as a result, we expect the overall recovery for the Thai economy to be relatively quite flat. For some of the other countries, such as the Philippines, we expect the economy to take a lot longer. The economy was very significantly hit during the very strict lockdowns in Q2 of last year. And that very strict lockdown resulted in some structural damage to the overall economy, significant increases in debt levels, closures of businesses, uh, very sharp rise in unemployment. And all of that is not just going to have a short-term impact, but will have a longer-term impact on the overall economy, which as a result, the recovery in economic activity will be quite slow. What we can hence see here is that when we just look at the overall amount of business opportunity that is available in these countries, uh, every single year, it is likely to still be below pre-COVID levels, below the Q4 2019 levels in most of these countries, or at least 3 out of the 5 countries, pretty much throughout 2021. So it is important for businesses to really adjust their expectations and ensure that even though the significant large lockdowns and a lot of the bulk of cases which took place in 2020 are likely to may reduce in 2021, economic opportunity will not suddenly expand to pre-COVID levels this year.
So segmentation, prioritization, critical strategies. Just a reminder to our listeners, you're welcome to submit questions by just clicking in the chat and submitting a question to Frontier View webinars, and I'll try to weave those into the conversation our remaining time. Ashu, our clients find obviously the top-down economic expectations very useful. They can help pressure test their own plans and assumptions and develop demand and recovery forecasts for their businesses and segments within their business. But we also know that most of the Western multinationals that operate in Southeast Asia don't necessarily do all of their complete manufacturing of their products in the region, but often kind of import products also into the region. And so one of the things that plays an important role here is currency and currency fluctuations. And so maybe we could quickly just give a peek at what our expectations are for the Southeast Asian currencies for 2021.
Mm-hmm. So for currencies in Southeast Asia in 2021, we are expecting most of them to experience at least some level of depreciation. Except for mostly the Malaysian ringgit. The Indonesian rupiah is going to continue to be under pressure, largely because of its twin deficit, which basically means that the country has a deficit in its trade balance and also in its fiscal balance. These two factors combined usually tend to put significant pressure on currencies, regardless of what country it is. And so we do expect that to continue being a factor that will drive down or put depreciatory pressures, at least on the Indonesian rupiah. But a 5.9% depreciation in the currency in the rupiah is nothing too significant and is actually pretty in line with what we've seen depreciation be like before COVID really took place last year. So even though we expect the economic situation to not improve drastically, we expect some support from the central bank, some positive central bank policies to help ensure that the currency does not depreciate very drastically, while at the same time the twin deficits continues to put some pressure on the currency. The Philippine peso is also expected to depreciate, largely because what we expect is some of the construction projects in the Philippines to restart again this year. And what would happen then is that companies that are involved in that construction process will need to import capital equipment from abroad. And we have seen historically that importing of capital equipment has resulted in downward pressure on the currency. For Thailand, we're expecting some depreciation, largely because of the contraction of the tourism industry, which acts as a form of exports from Thailand and export of tourism services. And given that has reduced quite a bit, we expect some minimal depreciation there, but also somewhat positively supported by a relatively stable economic condition. And then finally, Vietnam, where the currency is highly controlled and the government depreciates the currency by a slight amount every single year. We expect that to continue on even in 2021. The Malaysian ringgit, which is bucking the trend, is expected to depreciate largely because we're expecting slight improvements in oil prices, and the Malaysian ringgit does tend to be very correlated with oil prices in general. So what companies can expect as a result is that continued depreciation in these currencies will increase their cost of imports. So whether it is a direct cost to the suppliers or the multinational companies themselves or distributors, it is going to put that increased pressure on the cost of imports. Whereas in Malaysia, things will be reversed, where we expect some of that pressure to really ease, which will be quite helpful in maintaining margins at a time where it is very difficult to increase prices amid a relatively slow growing economy.
Ashu, I want to shift gears, but before I do that, I have one question here just about if any of the, or what your view is on various governments across these different countries in terms of stimulating economy or providing a kind of safety net like we've seen happen, as this pandemic has played out with a number of governments to maybe backstop some of the economic decline.
That's a good question. And what we've seen overall for Southeast Asia, as all countries have already released their budgets for 2021, is that every single one of them is implementing an expansionary fiscal budget, which basically means that they're looking to increase their overall government spending in 2021 as compared to 2020. A lot of that increased budget is going towards investment, building up infrastructure, for example, which will help drive employment levels and also provide opportunities for multinational companies. And also a significant chunk of that is reserved towards social welfare, giving handouts or providing subsidies to farmers, for example. Overall, we are surely expecting a lot of the support that was given to individuals and companies in 2020 to continue on in 2021, though the funds allocated to that will vary country to country.
Okay, great. I want to shift gears from economic to political. And in the last couple of quarters, we've seen some major political developments and regional policy decisions. And I thought we could start off with the RCEP, which, and specifically, what can executives expect from this agreement?
So the RCEP, or the Regional Comprehensive Economic Partnership, is basically a free trade agreement between the 10 ASEAN countries and 5 partner countries, which includes South Korea, Japan, China, Australia, and New Zealand. It's basically an effort to harmonize the agreements that ASEAN has with these other countries. So ASEAN already has existing free trade agreements with the other 5 partner countries, and they're looking to combine them all together to create a unified free trade agreement. Now, given that ASEAN already has free trade agreements with these other partner countries, we do not expect a significant reduction in tariffs when it comes to trade with these other countries. But where the real opportunity will really lie, or where companies might experience significant benefits, is in the simplification of custom procedures, in administrative processes, in the documentation requirements, for example, which will really help companies that have deep-rooted supply chains in the region. One other major benefit will also be that if companies are looking to significantly fragment or spread out their overall supply chains in these member countries, they will still be able to split up their supply chain amongst member countries and be able to use that or just look at the overall amount of value added in the entire region to qualify for tariffs under the RCEP. And so it allows companies to take advantage of the various different benefits that different countries provide, combine them all together, and still get access to the beneficial tariffs or the low tariff rates that the RCEP agreement provides. And that's largely the benefit that we see here.
It's a really interesting point, and I guess the big question is time frame for when companies can expect to begin experiencing those benefits that you highlight, especially given what we've seen, the importance of supply chain and potentially supply chain diversification that the pandemic highlighted. So what is the timetable for ratification implementation of this?
Right. So when it comes to the RCEP, for it to really be implemented, it needs to be ratified by 6 out of the 10 ASEAN countries, and 3 out of the 5 non-ASEAN countries. The current expectation for the timeline is somewhere at the end of 2021 and beginning of 2022, which basically means that it will be implemented sometime around that time. And so companies will not really be able to experience too much of the benefit of this agreement in 2021. But the details of this agreement are already released. The specific items and documents have already been released. So they're all open for multinational companies to go and evaluate and identify areas of opportunity that they can start taking advantage of immediately after the agreement is actually implemented sometime later this year or in the beginning of next year.
Okay, that's exciting. I want to talk a little bit about individual countries and specifically political uncertainty. And we saw some political uncertainty in Thailand and Malaysia last year. Should we expect, as executives, should we expect that uncertainty will continue in 2021? And is there any other uncertainty on the horizon in other countries?
Mm-hmm. So if you focus on political uncertainty levels, the main risk really lies at this point in time in Malaysia and Thailand, and to a certain extent, the continuation of what we saw last time or last year. In Malaysia, the current government seems to have lost its overall majority in the parliament. You can see in the pie chart there that both the ruling government and the opposition have 108 seats each, with plus an additional 1 seat occupied by an independent. And as a result, the ruling government does not have a clear majority. But what the current government has done is that, or what the current prime minister has done is that he has implemented a state of emergency, which means that there can't be a change in leadership at this point in time. There is some backlash against that from the opposition, but overall, to sum it all up, what we are seeing is that the current government is highly unstable without a solid majority. While the state of emergency is in place, the government will still be able to take necessary actions to contain the virus, to stimulate the economy. But once it is forced to remove that state of emergency, it will no longer be able to do so. And once that state of emergency is released, there could be a significant change in leadership. Or there could also potentially be a snap election. What would happen then is if the ruling party at that point or the ruling coalition changes, there could be a change in spending priorities and policy initiatives. And as a result, any government or any company that is looking at government initiatives and relying on government spending plans to drive their business or support their business in 2021 will have to build in some resiliency and will need to be a little bit more flexible in terms of the demand planning, because things could change quite significantly during the year if there is a change in leadership. In Thailand, the issue of social unrest still continues. Protests are on pause at this point in time due to the secondary outbreaks that the country is experiencing. And while the protests are on pause, there has been an increase in arrests of protest leaders to try to quash the protests even after the lockdown restrictions are eased. Now, it is quite uncertain what is likely to happen once the number of cases come down, whether the protests will resume, but it really depends on how long it will take for the number of cases to come down. If it takes the country long enough, and if the government is able to significantly weaken the leadership or the leaders that really drive the protests, it could take a while for the protesters to then organize once again and come back, which might be after 2021. But if the number of cases come down quite rapidly, and if protests are able to resume, we can expect continued backlash, continued social unrest, and larger gatherings in Bangkok and some of the surrounding provinces, which would disrupt some economic activity and also particularly subdue investment sentiment, preventing that recovery in investment levels, which is very important for Thailand right now to be able to recover its economy and to also provide our industrial companies with continued demand.
Great. Okay. What I want to do now, Ashu, is I want to move to the B2C landscape, and we're going to kind of spend 7 minutes or so on B2C and on B2B as well. So we'll start with B2C, but if you're a B2B executive, stick with us here because we'll provide a deep dive into the consumer environment, but then we'll talk about investment, manufacturing, construction across the region. So incomes, employment levels, total consumer spending, they all took a hit last year across the world, and it was no different in Southeast Asia. But as consumer companies, consumer-oriented companies look ahead over the next 12 months, Shu, what can they expect?
Mm-hmm. So when we look at overall consumer spending levels, we are seeing, or we expect them to recover quite quickly across most of the Southeast Asian countries. Once again, Malaysia is expected to experience that disruption in Q1 of this year because of the secondary outbreaks, but most other countries are expected to experience a smooth recovery. Thailand, as you can see here, is expected to be one of the fastest recovering countries, at least amongst the 4 that we have highlighted here, crossing pre-COVID levels already at the end of 2020, supported quite a bit by the fact that the number of cases was quite low, overall economic disruption was low, economic activity resumed quite early, and also supported by significant government measures, government spending plans, which provided a lot of handouts to individuals to boost their overall consumer spending and also to support them economically. Philippines, very much like the reason that we mentioned earlier, is expected to be a country that recovers much slower. And that's because the initial lockdowns have had a structural damage on consumers. Debt levels have risen significantly, poverty rates have increased significantly, and as a result, the overall recovery is expected to be a lot flatter, and it will take a relatively longer period of time, basically, for the Philippines to be able to hit pre-COVID consumer spending levels.
Ashu, when we look at the recovery, is it going to be largely driven by online sales? We saw that obviously e-commerce and the shift to consumers moving online really accelerate and get a huge boost last year. Are you expecting more of the same in terms of this consumer spending recovery?
Mm-hmm. So online sales is going to play a significant role in the sense that we do expect a significant expansion of overall e-commerce. What we see here is basically a chart that, based on surveys, about 12,000 of them, it indicates how much overall usage of e-commerce increased during the lockdown and what is the expectation of e-commerce usage level after lockdown restrictions are eased, after COVID numbers really reduced quite significantly. And so what you can see here is that during the lockdown period, there was this very significant increase in the usage of e-commerce across countries, particularly in countries such as Indonesia and the Philippines. Now, once lockdowns are eased, once the number of cases come down, people are expected to split their basket between offline and online. But at the same time, overall spending and usage of e-commerce is still expected to be quite a bit higher than what we saw before COVID levels. Based on these surveys, consumers have indicated that they still expect to continue to use e-commerce quite significantly, even once retail activity resumes to its pre-COVID or retail outlets are allowed to remain open as they were before COVID really took place. And as a result, this will drive an overall expansion of the e-commerce industry, making it increasingly important for company strategies. And it's not just that the usage of e-commerce for every individual is increasing, but there's also been a very significant expansion in the number of users of e-commerce. So what we have here is basically the proportion or the percentage of total digital service consumers that are new, that started using digital services because of lockdowns in Southeast Asia. And about 1/3 of every user of digital services at this point in time is a new user. And 8 out of 10 of these new users have indicated that they will continue using those services even after lockdown restrictions are eased. And as a result, there has been this very significant expansion in overall the size of the e-commerce industry, which makes it increasingly important for B2C companies to now focus on this.
Yeah, I think your estimates in the prior slide are underestimated in terms of after the pandemic, what levels e-commerce remains at. I think it's going to be a bit higher than that because I think we're all getting it's becoming part of our rituals. But if we dive deeper into the data, let's talk a little bit more about where the greatest pockets of opportunity are in the online space across these ASEAN countries. What are some of the categories? The winners.
Yeah. Well, when it comes to the number of new users that were just onboarded, just diving a bit deeper or changing the view that we take for looking at the data that we highlighted on the previous slide, we saw a very significant onboarding of new users for groceries and for food deliveries, but also at the same time, a pretty significant increase in new users for electronics, beauty, and apparel. So overall, there has been this expansion across, but largely driven by, but quite significantly also driven by groceries. And this hasn't just been from the demand side. There has also been a lot of supply side initiatives where a lot of companies have expanded their presence regionally from one country to the other, or a lot of smaller e-commerce companies that are domestic e-commerce companies have expanded their operations to cover more products, cover more regions. And as a result, this combination of demand and supply side factors is something that is contributing to the overall expansion of e-commerce across different categories.
And obviously, I think while the pandemic's created a lot of this opportunity for consumer-oriented companies to sell via digital, offline retail still remains a key part of company strategy, especially in Southeast Asia, where you've got a very fragmented infrastructure in many places. So real quick, if you can kind of just give me a sense, and let's be speedy here because we got to get to B2B, but what are some of the recent developments in offline retail, and what's the outlook for 2021 and then beyond?
Absolutely. So if you look at the overall activity at offline retail stores, basically as a proxy for how we are seeing recovery take place, what we see across countries is that levels of activity at retail and recreational centers have not resumed to return to pre-COVID levels. Overall visits remain low across countries. They did increase a little bit in certain countries, but because of secondary outbreaks, they have been disrupted. And this has been driven quite a bit by lockdown restrictions initially. But over a longer period of time, it was also quite significantly driven by consumer fear levels, where you can see, particularly in the Philippines, when lockdown restrictions were eased, overall visits still remained extremely low because consumers were still scared of really heading out. One other thing to note is whenever any lockdown restrictions are put in place, one of the main focus is retail stores. And as a result, anytime that governments implement lockdown restrictions, we can expect significant disruptions there. As a result, over a longer term, throughout 2021, we expect a gradual recovery in offline retail activity, but we do expect a lot of disruptions, sporadic disruptions time to time, which are likely to be temporary, but will continue to happen throughout the year because of secondary outbreaks and any lockdown restrictions that are put in place.
Okay, good. Let's move on to the B2B part of the discussion. If you're a B2C executive, stay on the line because we do have some questions and we want to make sure you're able to get those questions in. And also, I think there's some good cross learnings from your peers. But if we think about the impact that COVID has had in terms of disrupting both public and private investments last year, and our clients in industrial space in particular reported substantial contractions across a number of major sectors. What's the outlook for B2B in the coming year? Are we likely to see a better situation if you're in the B2B space in terms of investment recovery?
Yeah, so if we look at the overall expectations for investment recovery, to a certain extent similar to what we expect in Southeast for consumer spending, we expect this gradual recovery in overall investment levels, but the recovery is expected to be slower than what we saw for consumer spending. We don't expect most of the Southeast Asian countries to really recover to pre-COVID levels this year, and for investment to be restricted, particularly when it comes to private investment. Most of this recovery will largely be driven by government initiatives, infrastructure development plans, and also will be even any recovery in private investment will rely quite a bit on things such as government initiatives, such as incentives that they provide, any support in terms of loan payments or access to cheaper loans that the government may provide to companies for them to take advantage of to increase investments. And that's largely what's going to be the driver here, but overall recovery is expected to be quite slow. Some countries here, such as Malaysia and Thailand, would have been expected to recover relatively faster than what we see here, but because of the high level of political uncertainty there, we expect that to also put some pressure on the recovery in investment levels in these countries, whereas Indonesia and the Philippines will quite a bit be restricted by the high number of cases in the country.
Should you have a sense of foreign direct investment?
So it's difficult to track foreign direct investment in some of these countries just because of the lack of data. But what we have started seeing is in countries such as Indonesia, for example, in countries such as Malaysia and Thailand, some foreign interest. There has been a lot of effort by governments to really provide incentives to attract investment into specific industries that each of these countries have highlighted. And there has been interest, but there hasn't been a very significant inflow of capital at this point. Now, what we can likely see is beginning from Q2 and in the second half of the year, if things remain relatively stable, for some of that capital to actually start flowing into the country, also to a certain extent supporting this recovery in investment levels.
Okay, so it seems like investment levels, B2B demand might take a little bit longer for recovery vis-a-vis consumer. But what about construction, which is an important leading indicator for the region, and it is particularly important for industrial companies that operate in the B and C space? We saw COVID dip in Q2, some recovery in Q3. What about looking forward?
Mm-hmm. So what we are seeing in terms of construction activity is that a lot of that improvement, a lot of that recovery will be driven by government related infrastructure development plans. And we are seeing that sort of recovery taking place across most countries. Indonesia and the Philippines are two major countries that have announced significant increases in their overall spending plans for infrastructure in 2021. And that is likely to really go through. We're already seeing some anecdotal evidence of projects making progress in the Philippines, which will help support some of that recovery in demand. It is particularly important in the Philippines to note what happens in the first half of 2021, which will really set the stage for how much construction activity takes place during the rest of the year. Thailand is one of those countries that continue to experience solid or pretty significant growth in construction activity even last year because of government or public infrastructure projects. And the government will likely continue that in 2021, specifically focusing on the Eastern Economic Corridor, which is an initiative by the government to attract investment and develop 3 provinces in the country with better infrastructure, and it will likely focus on large-scale infrastructure projects there to boost some of that investment. Vietnam is also fairly well positioned with a lot of support from Northeast Asian countries, which will help drive some of that construction activity, once again, quite a bit focused on infrastructure development.
Okay, well, I want to shift to your final question for B2B is the outlook, shift from construction. So let's talk about the outlook trajectory for manufacturing in the region. And if you could give us a sense of your outlook as well as the segments where we'll see the fastest recovery and those that might lag a bit.
Mm-hmm. So very much like what we saw in our expectations for investment recovery, what we're expecting for manufacturing activity is a slow, gradual recovery. What we have here is something called the Manufacturing Purchasing Managers Index, and you can see that there was this significant contraction in April 2020. And since then, there has been some expansion taking place. Any data point above the line, above the dash line, above 50, indicates an expansion compared to the previous month, and any data point below that indicates a contraction. And so after that very significant contraction in April and May, there has been this slight expansion during the rest of the year. But this has really, like most countries have jumped between an expansion and a contraction from month to month, which basically indicates that the overall improvement is quite gradual when we look at on a month-to-month basis. And as a result, manufacturing activity is likely to be slow to recover, or has been slow to recover, and will likely also continue to be slow to recover in 2021. There are a lot of, or manufacturers continue to complain about logistical challenges, supply chain disruptions, elongated timing for the arrival of inputs, for example, and that will continue to constrain some of this manufacturing activity. But when we start looking at closer to the end of 2021, we expect things to improve and for the pace of recovery of overall manufacturing activity to improve relatively faster. When we focus on industries that are likely to perform better, we expect industries such as automotive to take a lot longer to recover, which have been disrupted quite significantly, which are also seeing an increase in the buildup of inventory levels in countries such as Thailand. Whereas other industries such as electronics and electronic components, which are key export industries in a lot of these countries, is expected to recover much faster and is already seeing and can already be seen as one of those industries that is driving overall industrial production in several of these countries. Another thing to also highlight is that sectors and companies that are focused on exporting to Northeast Asian countries such as China are expected to recover slightly faster than companies and sectors that are focusing on exporting to Western countries, which are expected to recover relatively slower.
Great. Ashu, we're starting to we're running up against time. I had one final question, kind of that's a little bit more consumer oriented, and then I think we're going to need to wrap up here. But do you expect the tourism industry to begin recovering in 2021? It's such an important industry in the region. And, I think tied to that is a secondary question. Will most countries start opening up their borders only after they vaccinate their indigenous populations?
Right. That's a great question. And what we expect for overall tourism recovery in Southeast Asia is that we don't expect tourism to recover very significantly in 2021. Thailand has kept its borders open for the last several months now. And despite that, it has seen only a couple of thousand entries into the country every single month compared to the several million that it usually gets in November and December, in the months of November and December in a typical year. And this is largely driven by multiple factors. One is, of course, factors from the countries itself, which, as we've seen compared to other countries globally, countries in Southeast Asia have been quite cautious in opening up their borders. And we expect that to likely continue during the rest of the year. And even if they do open up their borders, it will be for tourists from selected countries. They'll have specific quarantine requirements, documentation requirements, all of which will just reduce the size of people who would be eligible or willing to travel. And at this same time, there's also a factor from the tourist side, which basically is the significant fear levels. Health risks are still a concern for most travelers. And as a result, travelers will not be looking to travel long distances for the purpose of tourism. And given that immediate neighboring countries in Southeast Asia are not major sources of tourists for most of these countries, we don't expect a quick recovery there.
Okay. Ashu, I think we're up against time here, so I just wanted to take a moment to thank you for this excellent, insightful, and incredibly broad-ranging conversation. I think we covered a lot, and in some ways, I think we could keep going for a few more hours if we wanted to. So we'll have to do a follow-up soon. I also want to thank our listeners as well. We've covered a lot of ground in a short amount of time, and I encourage all of you to read our analysis and importantly, schedule individual briefings with Ashu for yourselves, for your leadership teams and your teams as well, just to get deeper insights into our outlook for Southeast Asia. And as a reminder, Frontier View clients can speak to Ashu or any member of the Asia Pacific research team at any time by scheduling time through your client relationship director. And also all of our research, award-winning Frontier data and analyst insights are available and always updated on Frontier View desktop and mobile applications. So with that, I'm going to conclude today's webcast. Thanks again, and we look forward to speaking with you all very soon. All the best.